Welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Talks are underway in Stockholm between the US and China over a trade and tariff deal. Prospects are not high. And the recent EU-US deal has the makings of unravelling. Both France and Germany are unhappy about the outcome, made worse by the US claiming verbally pharmaceuticals have been excluded, when their EU negotiators said they were not excluded from the 15% written deal. The big casualty in all these deals, including the Japanese one, is trust in the US. Smartarse public commenting by the US president, even by some of his advisors, means the deals struck are unlikely to be respected by the US or trusted by the others. The result isn't a deal, it's a fluid mess. New Zealand's situation in all this will be a footnote, probably sometime on Saturday. In the US, the Dallas Fed's factory survey improved sharply in July, but this is all about higher production. New orders are still contracting, even if at a slower rate. Elevated input price pressures continued in July. Improved sentiment is driving the raised output, even in the absence of a pickup in the new orders. Financial market eyes are now turning to Thursday's US Federal Reserve meeting and decisions. Despite the overt White House pressure, financial market pricing shows virtually no one is pricing in a rate cut. In Canada, wholesale sales came in better than expected, up 0.7% in June from May, when a 0.2% retreat was anticipated. But despite that recent gain, they will still be lower than in June 2024. Across the Pacific, from 2022 to 2024, Taiwanese consumer confidence rose. But since October 2024, it has been falling. However, the July survey rose, the first break in the recent downtrend. It wasn't a big move from June, but they will take it. In China, they're taking something they don't want. Foreign direct investment recorded another net outflow in June, and a worse one than the highly unusual April net outflow. The reasonable start to 2025 is being undone faster now. In the 6 months to June, they've had a net inflow of $42 billion. In 2024, they had more than that in just the first 3 months, and even that was much weaker than in 2023, which was up $98 billion, or 2022, which is up $112 billion. Fleeing investors isn't a good look for China. And Indian industrial production expanded a rather weak 1.5% in June from a year ago, held back by a surprisingly weak mining sector, and especially for coal production. In their factories, however, the story is much better, with manufacturing production up 3.9% from a year ago, a better rise than in May, although less than the 4.5% expected. The US Treasury 10-year yield is now at 4.42%, up 3 basis points from yesterday. And the price of gold will start today at $3,309 an ounce, down $27 from yesterday. American oil prices have risen $1.50 though, at just on $66.50 a barrel, while the international Brent price is now just under $70 a barrel. And the Kiwi dollar is now at 59.7 US cents, down 0.5 cent from yesterday and back to where it was a week ago. Against the Aussie, we're unchanged at 91.6 Australian cents. Against the euro, up 30 basis points at 51.5 euro cents. That all means our trade-weighted index starts today at just on 67.6 and down a net 10 basis points from yesterday. And the Bitcoin price starts today at $117,664 and down 1.3% from yesterday. Volatility over the past 24 hours has remained low, just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.